Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Another fun-filled day. It's Thursday. Oh my God, OMG, what Mr. Powell said yesterday. Contradicting his own minutes. Yes, the minutes itself that they publish. He actually contradicted ideas and issues that they had discussed in meetings, claiming up on the stand yesterday, or at the press conference yesterday, that he didn't even discuss it. Oh, it's amazing. Yesterday he looked so confused. He looked lost. He looked, you know what? He didn't look that way when he finally went from, what was the magic words he used to call it? Transitory. That's it. He didn't look that way when he went from transitory to not transitory. I mean, yesterday he actually looked lost. He contradicted himself, saying things that they had said in meetings and published in the minutes that he said that they had not discussed. I only heard a few money managers actually bring it up. A lot of people didn't pay attention, and I guess that's part of it all, in the sense of that probably nobody really wants to pay attention to the fundamentals anymore. In other words, there was a time when you could watch the Federal Reserve speak, and it was almost like the Ten Commandments, etched in stone. Literally etched in stone. Uh, now the Federal Reserve will say something, and yesterday he actually contradicted what was written down in minutes, claiming that he had discussed, they had voted on, and so forth. And I know I've said that 3 times in a matter of 2 minutes, but it was a blow my mind moment. It was like, what? Who is this man? Who's behind that mask? Who's wearing that mask? Is he actually saying those things? It was wild, and you could see the markets. They were just totally. Now there's some translation I need to. Is that Hindu? Maybe. Let's see. I don't know. Let's see. Who is that? Good morning to whoever you are. And trying to read that. Let me just click on it. Maybe I can see something there. Report or block? No, I don't want to report or block. I just want to see who you are. But good morning to you. And so, yeah, it was a wild day. It was the Fed gone wrong. That's basically the only way I know how to describe it. Now, the markets were up at the time, the equity markets. It was late in the afternoon here in the States, because it was 2 in the afternoon Eastern Standard Time. So, and then I think the meeting occurred at 2:30. So, the press conference followed at 2:30. Excuse me, a little sneeze there, and it went on till about 10 after 3. And it was one of the more confusing things I had seen the Federal Reserve do in my lifetime. It's one thing for the Federal Reserve to change their direction, say, okay, we've discussed this, and I see now that I'm changing it. But to actually say, no, we've never had that conversation. Let's see, Dukascopy, Swiss article about. Let's see what that is. I'm getting something on here. Oh, that's good. They're putting the Federal Reserve up there. Excellent, 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 excellent. Yeah, it was. Oh, did Dukascopy say something about that? That's cool. Let's check it out. Yeah, it was one of the. It was the most incoherent Federal Reserve chairman. And you got to imagine, has anybody seen or discussed what Mrs. Yellen said? She's our Secretary of Treasury now, who was formerly the Fed chair, and she was in Davos. Thank you, Giannis. And she was in Davos, and she, how did she started saying things that made, she started calling taxation And she started saying that taxation, Biden's taxation and BBB is the new supply side economics. I mean, without a doubt, it's the opposite of supply side economics. But she actually said that, and she did a whole speech in Davos about that, or the Zoom to Davos. No, I think that's really great. I'm glad you put it up there. I'm really glad because I've never seen a Federal Reserve chair go so far off of the facts. Oop, I just seen my Skype go also at the same time. There we go. I will look at your setting tomorrow. Remind. Oh, okay, something else. Yeah, so I've never seen that before happen, and you can see the markets rolled over from it, and you can see our currencies are the pairs trades are all heading back up to the top of the range, and I'm like, what? You know, what's that all about? Why are they heading for the top of the range? They're supposed to be tightening, and everybody's supposed to be raising their rates, so they should be in a stable, sideways down move, not a let's go back to the top of the range move. No, I'm really glad you did that, Janos. Thank you. So, uh, and then, I have not had that conversation about Mrs. Yellen. I saw no reason to beat up on Mrs. Yellen. I mean, I didn't agree with her, but I didn't see any particular reason over the last, couple of weeks to bring it up because there was no venue really to discuss her claiming that the BBB and the taxation, the increase in taxes, and the inflation uh, is going to be reduced by taxation. And she did that at the Zoom. Now she didn't do that in America, addressing it in America, but she did it in the Zoom. So she has a policy to the Davos crowd, the globalists, and then she has a policy or a philosophy of economics when she's talking to the U.S. media. They're very opposite of everything she's mumbling. So it's very weird. And she has been caught over here saying that taxation will reduce inflation. I don't know where that one comes from. But to actually call it the new supply side economics, that's supply side economics is Ronald Reagan and Art Laffer. Now, for her to actually claim to increase taxes and increase government spending is the new supply side is relatively insane economically to suggest that. So anyway, it was a really wild day. The markets shifted from being up to being down. They were kind of flat this morning. Now the Dow Jones is down about 73 points. You can see we have the Swiss up there on the J4X. You can see that thing climbing up. Let's go over to Chicago Quant. We've got natural gas on there. Let's where's it? Oh, wait a minute. Where did I put? Let me just go find. Okay, so that's there. Oh, let's get the currencies up on there. Where is it? Duke Day Week. There we are. And so it's been one of the weirder things I've seen in a while. That's Biden. He always says that stuff. I don't live far from Biden, and he's been a bozo around here for 4 or 5 decades. He's a weird guy, very strange, too strange. Let's put it that way. The things I could say about Biden that I don't even, this is a family show as far as I'm concerned. So there's no way in the world I'm going to talk about Biden because everything is X-rated when you talk about that guy. I mean, he's a wacko. But and he's been a wacko a long time. The American president, Joe Biden, was asked by a reporter from Fox. Oh yeah, Peter Doocy, right? Yeah. Do you think the inflation in political risk for? Yeah, it's really weird. That news conference was about inflation. So in other words, it was labeled as that's what he was there to talk about is inflation. So Ducey asked him a question about the inflation, and he calls him He says that's the stupidest question I've ever heard. He says, and then he says something like SOB. That's what he called him. He called him an SOB. Uh, I see. The American president replied ironically, it's a, it's, it is a greater asset, more inflation. Yes, that's what Ducey asked him. That's what Ducey asked him. That's what, and he called him a stupid son of a bitch. That's what he called him. Yeah, yeah. What a bozo he is. Yeah, he really is. But anyway, you know, yesterday's news conference, it's well worth watching on YouTube if they haven't taken it down already, so they can hide it. But it'll be well worth. You can see he looks nervous. There's times where he's asked a question, and he waits like, I don't know, 5 or 6 seconds, like what they call a pregnant pause. In other words, he's past the time limit of a pause, and they're wondering why. And then he looks up and he goes, "Oh, I was writing down some questions, or writing down some answers, or something like that." He says stuff like that. It was the weirdest news conference I'd seen by a federal chair, ever in my lifetime. I mean, he was disorganized. His hair was just going up, and you could see he ran his hand through his hair sometimes, and his hair was kind of like sticking up at points. He looked a little disorganized. He really did. It was really bad, and the markets came down from it. And then there was some buying again. There's talk of maybe. He said basically there will be rate increases. They could be possibly every month. He even suggested that the Fed is not always willing to have a Fed put. Now he needs to get on the phone and talk to President Erdogan over in Turkey. I say we put Erdogan in charge of our Federal Reserve, because at this point, Erdogan's come up with a new plan that is looking pretty damn good, I'll tell you. The Turkish lira is looking very comfortable, very calm now. Now all they need to do is some economic stuff, and they've given a reason for money to stay in Turkey, because they're giving out free puts. And who knows, that currency could go the way of the stock market here in the States over the last decade. With free puts, the thing always finds a way to gain value, and the Turkish lira may find ways to gain value. So, all right, let's go over and check out the Swiss as I take a bite of a little slice of apple. Remember, it's breakfast time here in the States. What do we got here? And I've been up for 2.5, almost 3 hours. Doing other charting stuff, doing some physics, the whole bit. So let's take a look at the Swiss right there. You can see it's banging through the top end of the range. It's like, whoa. I thought everything was going to go sideways and down, not turn up. But Powell has definitely shaken the markets up. Take care, Janos. I saw that. I got that message. Be safe, be smart out there. And thank you for posting that stuff. This will be good for anybody that wants to look into the Federal Reserve yesterday. That was, like I said, it's one of the strangest ones I've ever seen in my lifetime. Can you imagine? He's saying that now they may not have the put to protect investors. I don't know. Anything's possible. Look, I really believe that in the end, the Fed will just float more free money, since no one's giving them grief about it. The president loves the free money. He's trying to pass trillions of more dollars spending just so he can get more free money from the Federal Reserve. That's what the Federal Reserve is doing, is they buy all his bonds. So, there's a lot of weird stuff out there. Things are going to change in 10 months, traders. It's going to be wild and woolly. It's going to look like rats running from the ship. Democrats are going to be like, just running like rats off a ship. Honestly, they're going to be like, no. It's like a sinking ship ready to happen. All right. Decades of stealing there are going to be people going to jail finally. Decades of stealing by the Dems is going to get nabbed. All right. You can see here Swiss on both charts, on the J4X and the Chicago Quant. You can see that upwardly momentum. You see the white line here, pushing up. You can see our work doing the same exact thing for the last 3 days. pushing up through the zero line, and we call the dashed line the three-dimensional, you know, or at least it's a two-dimensional flat surface zero line as far as I'm concerned. And when a white line pierces through it, it's usually their strength, and when it breaks below it, it finds the way to go down, just like our math. Let's see, what else can we say about that? I guess that's about it. I'm curious now to see. I know I sent out the charts this morning at our work out already, and I know that these things are down. I know these are down. They're pushing on them more. This is not, matter of fact, now they've made the new low. They took out this low right here. We were wondering if they were going to go take out that low, and we were looking for them to come to that 0.23 on the Fibonacci of it. We have the range Fibonacci, and so they're really putting pressure onto that. You can see the weekly has dipped. I really thought Powell had a good idea. We raise rates in a slow, conservative way. Not like maniacs, and at the same time, the rest of the world does it, and the exchequer jumped the gun. Back in December, and they started raising ahead of us. And Powell must have, I don't know, Powell must have been on the phone with somebody there and said, yeah, I think I'll raise the rates if the circumstances look right. And then maybe he said something else, I don't know, like, yeah, I'm planning on doing it. Must have done something and made the exchequer think that we were raising rates. They go and raise rates 2.5 hours ahead of them, and then he comes out and does nothing. And everybody here was stunned. We really thought he was going to raise them at 0.50, not just 0.25. There was a real strong feeling here in the States he was going to raise them half a point, and instead he did nothing. And then there was a small feeling. I said this yesterday and the day before. There was a small feeling that he might raise the rates, yesterday. Again, he didn't. It's really, they just won't. And I'm not convinced that they're going to, they're going to raise their rates, kicking and screaming. They're not going to do it. He has not been approved for his second term. And so until he gets approved with that second term, he's not going to raise rates as far as I can tell. That's what I've been saying all along. As much as I think that they should, I don't think he's going to do it until he gets, once he gets sworn in a second time, then all of a sudden, Katie bar the door, as they would say back in the Old West, they're going to come busting through. The rates are going to come busting through, and then there's going to be all kinds of angry with the Dems. The Dems are going to be really angry. So anyway, let's see where we at. Let's see what the cable's doing. I saw the weekly this morning, right on the edge of going into the weekly sell. It's doing a buy, but on the edge. Right. Let's see, where's that mouse at? Right there. Yeah, look at that, and you can see, look at the number, minus 0.006. I mean, we are, and you can see, plot one now is minus 15. You see that? Just went from minus 14 to minus 0.1000, or as we say in England, ZZZ16. So, it's they're putting pressure on it all because Mr. Powell has just shown that the emperor does not have his pants on. That's what it seems like to me. From there, we'll jump over to the Turkish lira. See how that's doing this morning. I did not look at that because we don't have anybody watching it at the moment. Turkish lira, there's the dollar Turkish lira. Look at that. Staying inside that cute little box we put up there. It's going to stay like that for a while, I think. You see it's softly sliding into the weekly sell without not any nasty aggression. And, we're in a weekly sell for a second week, and we're in a daily buy for 4 days now, and it's just it's going to take a while. I think this is going to replace this particular box is going to replace the range. In fact, I guess we could move it down a little bit more. The range is basically like that now, and I really have I have a hard time believing this thing is going to break out of that range for a while. We'll see. I know this is a bold thing to say, but I think that the free put concept is the smartest one I've seen a political leader do in a long time in the circumstances that President Aragon is in. And let's fix that box a little bit more, like that. So I really think that's what we're going to see there, is that this product is going to just kind of drift around inside this big long rectangle, and it's just going to go on and on and on. You can see here a soft slide into the weekly sell for a second week with no problem, and even with it in the buy. Matter of fact, today the euro, see that, the euro against the Turkish lira is a plot 1 is minus 0.01, and the plot 4 is minus 0.03. So the pressure is on that. All right. Let's see, what do we got going on from there? From the Turkish lira, we drift over to the, where do we go from here? We go to the Canadian. Oh, I saw some really weird stuff yesterday on the Canadian. I heard that the loonie, the whole, I heard that they were expecting, maybe they were expecting rate increase, I don't know, or something like that. And it didn't happen. It was a really weird thing. Very weird comic where the trucks were like driving through a divided sea, like a Moses type thing. It was the weirdest thing, where the sea is parted and trucks were from Canada were trying to drive to the United States. And those they're trying to exit. I don't know, the president, or I guess it's the second, what's his name, Prime Minister Trudeau is blocking exports or something. I don't know, and then blocking imports at the same time. These leftists are out of their minds, just out of their minds. They want to go all Joe Stalin. It's the weirdest thing in the world. I mean, didn't any of them ever have a history class? I just don't understand it. Whatever history class they had, obviously it was the wrong one. Yeah, so it's the weirdest thing. You can see here, it's trying to turn up. I really have a hard time believing this thing's going to get some legs on the upside, but notice it's at the 0.23 on the opposite side of the Fibonacci of the range, just as we see on the cable and the euro. Here's the euro again. You see it's playing with the 2.3 on the other side of the range. And let's see what the cable's doing. Cable's doing the same thing. It's been riding the 2.3, for 4 days. So we are, and then when you go back to the Swiss, you can see the Swiss is busting the range altogether. Wow. I really, I don't want to use the word like panic or crash or anything like that. I really don't see that going on. But you have to imagine this could be like a leaky rowboat. Anybody out there goes out into a lake in the summertime to go fish or in the fall, and you're casting your, you're out there fishing in the boat, and the boat just keeps on picking up a little more water every so often. Before you know it, your boat wants to sink if you don't get rid of the water out of there with a little bucket. I mean, I think the whole marketplace is going to be like that. It's just going to be like just slow, sloppy, no direction, 1970s, just kind of sloppy. I mean, you got to really, let's say this about that. That's an old Richard Nixon quote. And that is that you have to imagine that we're only talking about going from, I don't know, what are you talking about? Going from zero interest rates basically to like 3%. I mean, we're not talking, when I got my first job on an exchange floor, interest rates were 19% here in the United States. 19%. They went up to 21% when just as President Reagan was being sworn in. And over that year, they went down to something like 17 or 18%. They dropped about 4 or 5 percentage points. And then it was a slow, steady burn from 81 to 82 of sideways to a little down to sideways. And then, we had the explosion in August where the stock market tripled because he got his legislation passed, the Kemp Roth bill passed. And you know, the interest rates slid from that to 14%, then like 13.5, and then 13, and you know, here we are now, you know, basically almost at 0 or 1%. What's our 30-year bond is trading at 2.12, I think it is, 2.14, something like that. They sold them down. Let me just show you what they did to the bond market. Now let's put it up on J4X at the same time. There it is. Not up there, not there, not there. There it is. And you can see interest rates, when this goes down, that's the price of the bond. That means interest rates are rising, okay? So this goes down in value. That means that the price of the bond that you pay for it means interest rates have been going up. That's what that reverse thing that goes on when you trade bonds. Let me just go over to, let's put it up on the Chicago Quant. That's not it. Close. There we are. There's the 30-year bond there. There you go. You can see it. And, you know, it's been going down just like you see on J4X. And we've been in a weekly sell since this plateau up in here in the 162 area. And now that the bond is trading at 153 area. And so the bond price itself, as it goes down, you know, it loses value, interest rates are rising, okay? And so that's where we are. Oh, hey, Jordan, how you doing? Would you like to look at silver specifically around 2008, trying to work out that rally around 2008? 2008? All right, let's go see that rally in 2008. I would imagine that you're talking about, that's when Mr. Obama had was getting elected, or was just you know, he'd taken the lead in the polls, and they knew that he was going to win the race because it was against McCain. And let's see how far back we can go to silver. Let's do that up on J4X. We're going to go like that. We're going to go like that. And we're going to go to monthly. And then we're going to put it in there. Right there. There's silver. See how far back it goes. There it goes. It goes back to 2008 there. I see it. Let's see if we have data for that. It's loading it up. I think I was sipping my tea now that you're got the computer doing some work. There you go. So now you've got that rally. That's the Mr. Obama rally, I guess you could call it. In other words, you know, when you put a Democrat in charge of the White House, you know that there's going to be inflation and problems. So, you know, that's what metals are all about. They're like the cryptos. The idea is, you know, you know, they're supposed to be in a risk adverse situation. In other words, you know, when you lose confidence in the marketplace. And I guess if we put the stock market in there, it probably goes the other way somewhere along the line. Let's see if we can do that. Let's see if it goes back to that. Let's see if it'll do that. And it doesn't go back to 2008 to see that. I can say that the stock market was at the 12 or 13,000 area. It went down to 6,000 the first year of Mr. Obama. So, you know, it lost, you know, 50%. So that kind of matches up to your, was it the silver, right? Let's go find silver again. Now, what's the question about silver though? Let's see what you have to say about silver. Let me just reread your question again. Would you like to look at silver specifically around 2008, trying to work out that rally? Well, when you say work it out, we know the great uncertainty that was coming, because Mr. Obama was campaigning on the idea of raising taxes. So, and spending enormous amounts of money at the same time. You know, that's their answer to everything, is raise taxes, take money from everybody, and then go spend it on your projects. on our projects that will save the world. And so that's pretty much what that whole move was. So will we see $8 silver again? I really have a hard time. I was saying to Robin, I don't know if we'll ever see 18 again. You know, I was saying I'll be surprised if it dips under the 20s ever again. If it dips under there, I said it'll last for like 3 or 4 days or something like that and go roaring back up again. That is my attitude about it. I really have a hard time believing. Yeah, that's the name of the game. So, what's your real question about it? Are you trying to understand why it took off from there? You say specifically around working out that rally. I guess I've answered the question. I realize now. And you know what? When you look at it that way, you know, it looks like you can say this about it all. This looks like, you know, the A, and then this is the B, and then this is the C, right? So this is like a big ABC, and the B up again, or this is the R.N. Elliott interpretation of it. You know, can't take out these tops here, and possibly, or this is the 1, 2, 3. This would kind of define that this is the main trend, which I don't see this as. I see silver only going higher over the next, you know, 5 decades, you know, or 2 to 3 decades. I don't see silver going lower. You know, I think that this is the new base in here, the teens, the mid teens, that type of thing. And I don't care how good the economy goes. I would assume that we'll see the worst case scenario is see silver basically challenge the 20 to the 18 area, something like that at best. And I think this is all buying opportunity for the decade over decade investor of the metals complex. People was talking about a crash in 2008. Yeah, we did have it. Still trying to work out why silver and gold would go up, because they're a buyer. They're a tool where people buy. Oh, there's a picture of Powell, but his hair's not as floppy as it was going into the close of that 10 o'clock, the 3 o'clock time, because they're a safe place to go to, like cryptos are. And you can see with the cryptos are pretty much matching the, you know, what do you call them? The metals. Actually, a lot of people are a little confused why the cryptos went down so hard with the stock market. It's supposed to be an alternative, but obviously the buyers in there are not necessarily following that pathway. So yeah, the market did crash. Let me see if we can find another way of getting it up on here. Let's see. Let's see if we can show you back there the stock market crash. Let's see. Where do I go? Let's see. Go with here. I'm going to get it up on the Chicago quant side of things, but not, I can't go back that far. It doesn't give me that much data. Delete that. Go there. Let's see. Can I go there? Let's go to Yahoo. We'll see if we can take it off of Yahoo. And what did we see over here again? Let's see if. Wonder if we can get a stock index itself. Let me check over here. Maybe we can get a stock index itself. The index, not the futures contracts, but the actual index on Dukascopy. Let's see if we can do that, because that would be even better if we, you know, because we can control the data there. Let's see. I'm looking now. If anybody knows what the index itself, not the futures contract is, but if we could get, let's see, if I go like this, US 500, let me see what that does. Shift USA 500 and just the index dot IDX. Let's see if that would do that. Nah, see, it wants to give me the futures contract. It doesn't want to give me the index itself. Wonder if I do this. Let me try something else. SPY. Unsubscribe. Let's see. Let's try this again. Shift DIA. Let's see what that is. I think we might have found something here on Dukascopy. Let's see if we can find. Let's see how far back that goes. That's the monthly. Yeah, see that it goes back to 2018. So that's not it. Let's see if we can find something here. I'm gonna put up a chart that will show you the stock market better back then. Let's see. Let me just fix this for the moment. We're getting there. Traders, hang on for a second. We'll find it in a second. Let's see. And that's not it. Where's Yahoo? There it is. Okay. Let's see if I can get it off of Yahoo. INDU. Let's see. Not there. Oh yeah, here we go. We got it. Okay, we got it. Max. And let's see if we can change that. Area candle. Let's do it as a candle. I think we've got something here. So we can make this bigger. And I got to change that again. Okay, I think we got something here. This will give you a view of what we're talking about. That's 1 year. Or nah, I can't find it on there. I thought I just had it, and it just disappeared on me. Indicator comprehension. Okay, maximum. There we go. I think I did get it. Here we go. Okay, here we come. Here we come. Let's see. Minimize this. Now this is there's. Let's see if we can do this. No, you know what we'll do? We'll scroll over on J4X. We leave that up so you can see that. Okay, so 2008. There's 2000. There's 2008. Oop. There you go. There's 2008. Mr. Obama is elected right there. And let's get this over here. Can I do that? Can I? Maybe I can. Yeah, here we go. Let's see if we can. Yeah, there you are. Is there a way of scrolling this over? Yeah, there we go. That's 2003. There's 2007. Mr. Obama is elected. He basically takes control of things at this point. They realize he's going to be our president now. And the stock market crashes down to, this is the Dow Jones Industrial Average, crashes down and is swearing in there. And the Federal Reserve comes in and starts doing QE, but people don't know about it yet. So they did QE just to try to calm it down, but they don't know that the Federal Reserve is out buying futures contracts at the moment. Only a few of us realize it. That's where I had that conversation about stupid money. Remember that conversation I had about stupid money a couple days ago or last week, where ebb and flow and all that stuff and volume. That's where I'm starting to see ridiculous buying that doesn't make any sense. My math is telling me something's wrong here, and I'm talking to some professionals back then, other professionals, and and they're like, you can't say that out loud. People think you're crazy. It's like, I'm telling you, the Federal Reserve's out there buying because there's nobody big enough to do those trades. So 5,000 trades, it's cleaned up. That's what we refer to it on trading, professional trading. So in other words, someone comes in to sell 5,000 contracts, and a buyer steps up and buys it all, and the price of the product, it was originated as a sell. Normal professional traders will lower their bid. That's what how market making works. See, Jordan says, looking at it now, looks like an ABC pattern, maybe even over analyzing it. No, you're right, because I can't emphasize enough that ever since QE, technical analysis, it's almost like the Federal Reserve handed John Murphy's technical analysis books out to everybody at their trading desk. The markets respond to Fibonacci numbers now like as if they're clockwork. They respond to ABCs, they respond to channels, they respond to the triangles like clockwork. I mean, like clockwork. So a whole generation now has grown. They say over 50% of Wall Street has never seen, up until the crazy crash of last year, 2 years ago now, 2020, the February crash, they never seen a bear market before. At that point, they said only a third of Wall Street had seen a crash. 2/3 of the new employees never seen a market go down. 12 years of an up market. They don't know any different. And so a lot of markets trade now much more, I would like to call it, technically inclined. They follow the rules. Let's see. So people was talking about crash of 2008, still trying to work out why silver and gold would go up because of uncertainty. That was pretty much the answer to it all. And so you can see here, they had a lack. They needed to protect themselves. They were worried about inflation. They were worried about taxation. The whole bit. Just worried about bad economics. Remember, Mr. Obama declared that this was the new norm, and that we would never see past, was it 1% growth again in the history of America. Mr. Trump comes in and we're like 3, 4, 5% GDP. He's telling us that for 8 years, Mr. Obama told us that we would never see growth again, anything greater than say 1%. And you can see here, these are the Obama years, basically from here all the way across. This is the Federal Reserve now involved in buying stock market, and you can see the market was in the 14,000 before him, and it took 8 years to get it back to 14,000. Basically, I guess 5.5 years, something like that. It plateaued in the 15,000 area. Mr. Trump comes in. Basically, Mr. Obama leaves the office. He's done 8 years of Mr. Obama, and all he did is the Dow went up maybe about 1,000 points, 1,500 points over the 8-year period. He was declaring it the new norm. Mr. Trump comes in, and the market goes from 16,000 to all the way up in here to the pandemic to 30,000. Then that occurs, and then we get the V-shaped bottom. We talked about that when I was doing my webinars over and over again, that we were going to have a V-shaped bottom. We did, and then everybody thought for sure Mr. Trump was going to win the election with no problem at all. and then they, the strange voting things occur at 3 in the morning and the next day and all this stuff after he'd won the election. All of a sudden he doesn't win the election, and it's really weird stuff. And they've changed all those laws now. They can't do that again. They can't steal an election like that, or manipulate an election, or however you want to refer to it, control an election. And so then you can see here, Mr. Biden has the Federal Reserve out there, just involved in buying the stock market, very heavily and aggressively. And now we're at a point where they're, trying to get rid of the Federal Reserve from interfering. Let me just scroll over here. When this, in 2008 here, the Federal Reserve, okay, had a balance sheet of under $1 trillion. It was around 750 to 800 billion dollars. That's what the Federal Reserve's balance sheet was. In other words, that was the amount of money they had invested. Okay. From that, they have a balance sheet now of 9 trillion. So it's gone up tenfold. So the Federal Reserve is deeply invested in everything. Okay. And so, I mean, I could say, if you went back in here, I remember it was at 400 billion. That was a big number back in 2005, 2006, during the Bush years. The Federal Reserve balance sheet with the stock market 11,000 was only $400 billion. That's all it was. That's all it was at all. It was all this stuff here. It was $400 billion, $375 billion. They were watching it by the billions at that point. Now we're in the trillions. Mr. Obama gets in there, and the thing goes up to about $6-7 trillion, and then they've thrown in another couple trillion over the last. I think it's up 33% since since 2020 to now 2022. The balance sheet has gone from 5.5-6 trillion to something like 9 trillion now. So yeah, it looks like what you're suggesting. And so that's been the whole structure of it all. That's why I do Dukascopy and not other places, because I can say this, and tomorrow morning that Dukascopy won't be trying to get rid of me. And so that's where it's at this point. I'm going to take a sip of my tea. I've been yakking away here. Does that answer all your questions there, Jordan? That's the whole concept behind it. And that's what a lot of us responsible people are in the United States are trying to do, is we're trying to get the Federal Reserve to just stop printing money. That's why we have inflation. The only odd part out, I guess you could say, is let's minimize that. The only odd part out is we are not really seeing gold and silver do anything positive. Here's gold. You can see it's pretty much in a big channel, since back in May. It hasn't even taken out the highs of May. Here we go. This was the story of transitory for so long. Transitory. Oh, don't worry about the inflation. Mr. Powell, for the whole year of 21, up until 3 months ago, was telling us, no worries, be happy. Excellent. Yeah. So, and here's the cryptos. This is I would call it the disappointment, is that we keep on expecting, and I'm a big fan of the cryptos, but we really thought that this stuff would, let me just let's fix that. Or let's just give the circle thing up. And the end result is the dots should be on the bars, but it doesn't really matter. The bars are showing you, the thing has gone from the $70,000 area down to the $32 or $33, $35,000 area. 35,000, what's that? $32,000 area, 32.85. So the thing has lost 50%. It's supposed to move the opposite of the stock market. It's not supposed to move with the stock market. So, Let's see, where do we go from there? How's that? I guess I've done it all. Yes, you're welcome. I'm glad we had a good conversation about it. I like it when me likey me likey when we really look into what is reality versus this little spin machine of the fake media. I mean, Bloomberg, you won't get conversation like this out of Bloomberg or CNBC. Every time you even get near it, they run away from it. They don't talk real finance anymore. All right, from there, where were we? We're Canadian, right? So from there, oh, we did Turkish lira. Oh yeah, let's check out the South African rand. See what they're doing this morning. I would assume it was heading still back down. Let's see. No, they popped it again. Yesterday they popped it. All that little selling, we thought that it was going to be sideways up a little bit. Yeah, they did. They popped it again, right there. You know, and that to me says that the metals are not running anywhere. The metals are going to stay where the metals are. You know, that's sideways, choppy, nothing. You know, that's all that's telling us at this point in time. They just refuse to, you know, I don't know what you can blame. You know, who is manipulating the metals market? Someone's manipulating it. You know, because I don't understand how we're not at $5,000 or $10,000 in gold. So obviously something and somehow or someone is, you know, and who has the power to do that besides the Federal Reserve? The Federal Reserve, right? Who else has that ability? Nobody else has that insane ability. And let's get back to the beginning there. And that's what the problem is that our price discovery system is all messed up because we have an enormous deep-pocketed Federal Reserve printing money while our inflation rate is at 40-year highs because they're out printing money and buying all these assets. And then, you know, if you have to buy something that doesn't exist, that means you got to raise your price to get it. And that's why they call it inflation. It inflates in value. Let's see. All right, make the whole page there and we can move it over. There we go, that's better. That's 2016. That's the South African rand. You can see it was down in the 12s. You know, I mean, you know, the metals market, there's 2018 when it made a new all-time high in gold. Was it? No, I guess it was 2020 it made the all-time high in gold. So, during the pandemic scare. And so you can see there, you know, we've seen the South African rand, you know, end up in the 15s at this point. That's where it's at now. It has been trying to go down because the metals complex had been firm for like the last, you know, since November. We had been firm. Where's that top at again? Let's go over to here. Let's go back to gold. Where was that hump, that 19 or 20 we saw? Right there. Not that. Right there. And there's gold. So that hump was in June, and there's the November high. So it couldn't even take out the all-time high, because the all-time high was what, 20 something, right? There's the all-time high, 21, back in August of 2020. It was the confirmation of the V bottom wasn't totally there. I was saying it from March on we were going to have a V bottom, but a lot of people were concerned. You know, they weren't confident. Let's see. From there, you know, and you can see here the gold is just one big sideways choppy market. You know, doing nothing. That's awful hard to believe with inflation now. Oh, that's another thing Powell said yesterday. Powell said that too, and the media is not really picking up on it. Powell said basically inflation is worse than what we see right now. That's what he said. He said that yesterday. He said that inflation is worse. He didn't elaborate, didn't give us a number, but he basically said that the inflation rate is higher at the moment than what the number that we're seeing. That's why everybody's confused. Why the Federal Reserve is not fighting inflation by raising rates like back in December, like when the Exchequer did it. You know, there, boy, did the message get crossed there somehow? And how come? Why couldn't they raise the rates yesterday? Because he's not sworn in. The only way he gets sworn in is he keeps these interest rates a little bit lower. And I would say that our left is not very smart. They actually see things in socialists basically see things in a monolithic way. They actually think that things can stand still. They really do. They believe things can stand still. It's odd for people who want to call themselves progressive, but the moment he gets sworn in, those rates they're going to go flying. Don't be surprised if he does a couple half pointers. That would not surprise me whatsoever. So, all right, traders, you got any more questions? I know we didn't finish off our normal list. It's quite all right with me. If you want to see anything over the next couple minutes, just shout it out. And if not, then we'll call it a day, and I'll get ready to go trade. Pretty much the action today is since we've been speaking on this webinar, the Dow Jones Industrial Average was down 130 points. Now it's up 100 points. Let's just show you what's been going on over there. Let's see, where's it at? 2, right? There it is. And right there. And there's the Dow Jones Industrial Average. And so since this webinar started at 6:30, the Dow Jones Industrial Average slid down to 33,914. That's the low. Or was it 33,910 is the low. All right, right there. Yeah, 10. See that? And now it's trading at 34,167. So it has moved up from the low to now in just the last hour. It has moved 270 points. 270 points in the last hour. Back up again. This is the normal ebb and flow we're going to see now in the markets. And you can see our mathematics. Our mathematics went into the buy right here at the 33,000, what was that? 33,060 area, I guess it is. Something like that, 70 area. And see, let's just check that out. There's 33,914. There's 10. We were in the sell for that, moved down. You can see that. And then it goes into the buy here at 33,978. Nice spike there. Huh? This is a much more longer term, not long term. This is an intraday trading. This is intraday trading going on. And we've gone up from there 150 points. 150 points, yeah. 175 points. And overall, we've gone from 33,910, where's that? Right there. That's the low. To, just now, we went to 34,183. That's 273 points from low to high there. So this is going to be a lot of action, a lot of opportunity. You can see we're flirting with the daily, the intraday sell there. This is a 1 Tesla. This is a 369. Basically, it's just a shy of a full Tesla. So you can see right there, it's flirting with the sell. Looks like no one wants to see anything particular. All righties, this is Doc from North America. Catch you all tomorrow. Today's what? Thursday, right? Yeah, Thursday. So tomorrow will be TGIF. Thank goodness it's Friday. And so we will see you all tomorrow, same time, same channel. Happy trails to you until we meet again. Happy trails to you, to our Dukascopy friends. All right, traders. Yippee-yi-yay.